So diving into USDJPY, and this is a 3 month chart from 1978. We had SR1 break of structure, ROS1 giving us a descending trend line, and we return here as RS2, RS3, so on and so forth until it broke out from the structure. But the key important thing here is to see what price has done in the past, and that gives us a clue of what the future will look like. So let's go to monthly chart, as the 3 month chart is very deep. On a monthly chart, we have here as RS level from 1986. The chart is getting to almost 40 years. And we have another RS here that is 2, 3, giving us a descending trend line, DTL. Trading is all about looking back in time to see what price has done in the past. What price has done in the past will not be different. So we have another RS, another RS, another RS, breakout of structure, price return here as a retest. A breakout of a descending trend line touch 1, 2, 3. 1986, 1998, 2002, 2007, breakout 2014. So I'll put a vertical line on it to be objective. And we return retest in 2016. RT/SR. Good. And that makes this descending trend line a valid support floor. So in the future, if price comes there, we expect to have a potential reaction on that level. Then the next one is we started forming a demand floor from 2014, a W structure upswing will return in 2021, and that was the end. And if you look critically, you will see that the market formed another structure here, another high in 2007, and we had another one in 2015. Break of that ROS level, ROS1, ROS2, break out of structure, price return here, retest in 2023. UJ has not looked back. And to be practical, USDJPY is bearish on a monthly time frame. So if you look at it way back in 1982, dollar yen was exchanging for 276. So the market remains bearish. 277.012 as way back 1982. So this is the amount of yen you need to afford one United States dollar. Today, what do we have? 146. So the market is very much bearish. Yes. So it is always good that we understand that as a Forex trader, you are dealing with a real life practical stuff. This is the amount of money you need way back to afford one US dollar. US dollar is the base currency, JPY is the quote currency. So if you're a Japanese guy, this is the amount of yen you need in order to get one US dollar. It was even something worse than that. As way back 1971, you needed 360 yen for one US dollar. And that gap has closed so much that yen dragged the United States dollar. In 2012, they were exchanging for 73.640 for $1. So the market is bearish. UJ is bearish on a monthly time frame. It's bearish on a monthly time frame. So don't make the mistake of joining people who are shouting bullish, bullish. I once did that, but if you understand that you are trading currency in real life, then you look at it from a deeper perspective. So this is what we have, and On a monthly time frame, we have an SR level 1 here, SR2, breakout of structure, makes here retest. So I also want to put that up. That's the RT slash ROS. So, and you see how price have come there, respected that structure, sell down, and came respect it. After a while, price stabilized, making here a demand floor. Now the roof becomes my priority because now we have a roof and a floor. So we are waiting for a potential reaction either to sell from the roof when price taps into the supply roof or to allow price return to the demand floor. But this is a monthly candle, so it's going to be a while for such a expectation to be met. So for now, I think UJ is trying to reclaim its position and it's quite on a monthly demand floor, like you can see on the line chart. After break of structure here, price came retest it as a supply roof, break of a supply roof, return a demand floor in 2023, return in 2024 and 2025 May, and have picked up from there. So I think UJ might with the current tariff slam on Japanese products, we could see that UJ will upswing to update this roof. It's very much possible. Very much possible. So this is what we have for monthly time frame UJ. So we are going to look at weekly, then shortly after weekly, then we'll look at daily, shortly after daily, then we'll look at 4 hours and 3 hours, and we scale down to 30 minutes and look for beautiful point of entry. So it's a whole lot of work in analyzing the market because you must start from a higher time frame and scale down to lower time frame in order for you to have a clear directional bias and joining them with other macro factors like the 10-year bond yield of Japan, the interest rate of Japan, the 10-year bond yield of United States, the interest rate of the United States, the dollar index, and other economic factors. These are things that determine. So we'll look at economic outlook as well. It's not just only chart to get a clear directional bias for UJ.